everyone, welcome to another episode of Finance on Your Terms with Mike and Danny. We are continuing our series, Financial Words You Should Know. We've covered the F word,
fiduciary.
covered the B word,
Budget.
oh that was good, caught yourself, good job. Today, the C word. Yeesh. The C word today, credit cards. That is what we're talking about. What do we need to know about credit cards? What can get us in trouble and what could keep us on track?
Well, I think it's time for story because...
Story time.
Perfect example. I graduated from Central in 2004 with a bunch of student loan debt, something we hear about a lot right now. And because I was not the most responsible, the most disciplined individual with my credit cards, I thought that it was more my money than the credit card company. I graduated with about $4,000 in credit card debt because I would get a card, I would max it out, I would get a new card, roll those funds over and keep building my budget with my credit cards until it got to the point where I was paying almost as much in interest as I was in the principal payment. It happens. It happens over and over and over again. Luckily, I married a saver, and she kind of helped me see what a credit card was, that it wasn't my money, it was the credit card company's money. We were able to pay those down. And as I said earlier, we were able to get more disciplined with our credit card usage. And so this episode's not that credit cards are a bad word, that it's a bad thing. I actually think that they're a great tool because if you are disciplined in paying off your balance every single month, using them for appropriate things, you can get those perks. A lot of them have points you can use for airline miles, you can use for cashback programs. There's a lot of good things that happen with credit cards. You can raise your credit score, but you have to be disciplined with them.
Yep, and I think that's where we get into trouble because, you know, we as a nation, we as Americans, we as human beings, that's not the natural instinct. We have a rampant issue with spending more money than we make, and that's where credit cards usually fit in perfectly because it allows us to do so. It is basically spend other people's money, which always feels good. And so that's why I think it was about 2 years ago, the average household credit card debt here in the US was around $17,000, and that's a staggering number. But you can see how easy, especially at younger ages, it is to get into that bad cycle where it just keeps building, you can't dig yourself up out of that hole. So now we understand. If you are completely against debt, you want to pay off all your debt, you're very nervous about even having credit cards, then don't. That's okay. That's what the debit cards are for. That's what cash is for. That's what checks, I guess, are for. But that is perfectly fine if that's what suits you. But I know there are people out there that as long as you're disciplined enough to pay off that credit card every single month and to stay within that budget that we talked about last week, that you're able to earn some rewards in the form of cash back or miles or some other perks in that in those lines. So there are some benefits, but you have to be disciplined, you have to be organized, and you have to be able to pay that off every single month. Otherwise, it's just not going to work, and you're going to find yourself in a lot of trouble because that credit card debt works the exact opposite as the compounding that we want to see in our investments and in our retirement plans. So
I think that does it for this week. Thank you all for watching. This has been the C word. Tune in next week for, I think, our final word you should know when it comes to your finances. Until then, Mike and Danny, Finance on Your Terms, share the videos, leave us a comment, let us know what you think and what questions you have, and we'll see you here next week.
See ya.